could be announced in the next couple of hours, we understand itself. And Nisha, the person who's breaking the story and has all the details, is now with us to provide us more perspective. Nisha, over to you.
Thanks for that, Ekta. Of course, this is one development that we had first broken the last month, and in a few weeks, this is going to be confirmed in an hour or so. In fact, Sumant Sinha and JERA, the Japanese firm, are gearing up for that big announcement in New Delhi, which we'll be also covering. But the main highlight is that 10% stake in Renew Power, which is, remember, Goldman Sachs backed and Sumant Sinha founded company. That is going to be sold to Japanese firm JERA for around $200 million. Which, remember, the most significant bit is that $2 billion would be the valuation of this renewable energy business, which is also looking at an IPO later this year. So that is going to be a standard benchmark for the valuation of the company as well as it plans to go public. So Japanese firm JERA putting in $200 million for 10% stake in Renew Power, and that is likely to be announced very, very soon.
Nisha, I mean, what is the capacity we're talking about that Renew has on the ground, operational, both on wind, solar and solar?
So Renew Power currently produces 1,400 megawatts of electricity. Most of it is wind. It is a mix of wind as well as solar power. I don't have the exact mix currently, and they do have plans to ramp up that capacity by March end. They want to be at about 2,000 megawatts capacity. By end of next financial year, they want to be about 3,000 megawatts capacity, and all those will build up in the valuation when they really come to the market. But an important bit here is that $2 billion could be the valuation that they could want to get from the IPO whenever they go to the market, because that is the benchmark that has been set by these Japanese firms. So 1,400 megawatts right now will end the year with a capacity of 2,000 megawatts and is ramping up at a fast pace for the next year as well.
Nisha,